All right, ladies and gentlemen, now we're going to discuss what I think is one of the most fundamental things to understand when it comes to crypto investing, and that is market cycles. Because if you don't understand market cycles, you don't know what they mean, you don't know why they're happening, then it's very easy to get scared out of positions. It's very easy to FOMO into positions. To give you an example, when I called the market peak in April of last year, I called it on Twitter, and a lot of people were just mad at me as though I was somehow controlling the market. I only have like 40 something thousand followers on, maybe it's 45, I don't remember, 40 something thousand followers on Twitter. I used to never really use Twitter. Now, when I called the market, a lot of people were thinking I was trying to FUD the market because I wanted to buy in cheaper before we went higher, and everybody has their theory, and none of it was true. I was just basically saying, listen, I think that the market has peaked. We're going down for a while. We're going to head into a bear market, but we're going to head into a second peak. This is going to be a 2-peak market. And I said all of this in the same day, I think within a matter of a couple hours. And I was literally getting on a plane to Puerto Rico when I tweeted this. So I couldn't do anything about it. I had everything locked. I hadn't sold. I couldn't sell. And I finally, once I finally got a little more situated in Puerto Rico, I started setting limit orders. And I ended up getting out of my Cardano position at about $2 after a $3.14 peak. People were losing it. I mean, just getting mad with me, thinking I was somehow the one pushing the market down, which obviously was not the case. So fast forward to now where, we're real deeply set in the bear market. Bitcoin, I think, is broken down into the 15,000 range. Cardano has dropped down to 33 cents. And people are asking me, when are you buying back in? Well, I already started averaging in around 50 cents, even though I suspected we were going to go significantly lower. I don't mind averaging in or out, which is what I generally do as a long-term investor. And because people don't understand the cycles, they don't understand exactly what's coming next. And, when you see the price at 314 and you're not really familiar with the time in between each cycle and what have you, well, you could have started buying in at $1. Maybe you started buying in, maybe you start buying in now or 70 cents or whatever. Not necessarily looking to have an average in or out plan, but basically just looking to go all in at a particular moment. And then when it goes lower, let's say you went in at 75 cents, not really understanding the cycle, thinking, oh, it's going to go up from here, right? It's so much lower. And then it goes down to 50 cents, and then it goes down to 40 cents and down into 30 cents. Well, at what point do you get triggered and say, rather than average down your entry, you just sell at a loss because it's how low is it going to go? I can't afford to lose this money. Well, you only really sell what you sell, or you only lose what you sell at a loss, for one. And the other caveat to that is we basically say you never invest more than you can afford to lose, because if you're investing money you can afford to play with, you're not going to make drastic last-minute emotional decisions based on what's happening. So that being said, we're going to take a look at the market cycles, and I'm going to explain some things. So for one, you can see here the basic cycle of a market. Okay. You start down below and you can say, all right, well, we've got hope. Well, at the very bottom, this rally will fall like the others as the price starts to really go higher. This is after, a depression, right? So, stemming from the last cycle. So you can see here, it's a pretty big mess. So we're going to try and expand this a little bit so you can see it a little better. But you can see we have disbelief. Then you have hope. Oh, maybe things are going to go better. Maybe things are getting better. And then you have optimism. This rally is real. We're really moving, right? And then you go into belief and thrill, and then at the peak you get euphoria, and that's where everybody's so pumped up and they can't possibly fathom the idea of the price going down, which is exactly where I called the peak of the last market. And everybody was so mad at me because they're like, "Oh, you're fudding, Crow. You're fudding. There's no way." And then boom, we start to crash. Like overnight, we lost a significant sum of money in the market cap. And then, we get some up and down activity, and then you have complacency. Then anxiety. Anxiety is exactly where I was, even though I understand and I know I still feel these things. I still get anxious. What if I'm wrong? What if something big happens to send things the other way? So forth and so on. You have denial. And then all the way down at the bottom here, you have capitulation. Basically, like the sky is falling. It's the end of the world. I'm done. I'm spent. I can't take it anymore. And then you have you start to move up, and you get into panic. And how long is this going to take? And what's happening next? Then you get angry because you've spent all this time riding these market cycles, investing, accumulating, doing what you think, but you just don't understand the cycles, and you got caught up and you bought something at the peak with all the FOMO and the marketing just hitting you right in the face, and you bought in at the highs, and you basically just watched everything come crashing down, and you're pissed. You're angry about it now. And then that anger, ultimately, you get jostled around a little bit until you end up in depression and then disbelief, and then you start the next market. I basically call it chasing the dragon of crypto. You're chasing those new highs, which is why if you look at YouTubers on crypto, you can see the hopium videos always get the most views. You know, the people who are unrealistic typically do much better on YouTube because it's the sentiment everybody wants to hear. It can't rain all the time. It's not going to rain much longer. We're almost at the end of this. We're almost there. We're almost there. But it never really seems to come until it does. And by that point, everybody's already capitulated. They're done. They're spent. You know, everybody's YouTube numbers have dropped. So what you're looking at now is the Bitcoin halving chart. You can see here, you've got the first halving, you've got the second halving, third halving, okay? Because this halving happens every 4 years, and it has since 2009 when Bitcoin was first launched. So every 4 years, what happens is the mining yield gets cut in half, okay? So, you know, if all of the miners in the world are mining up 100 Bitcoin a day, you have a halving. Well, now that's dropped to 50 Bitcoin a day. And then in the second halving, 25 Bitcoin a day, and so forth and so on. It'll keep getting cut in half. I think the final Bitcoin is supposedly supposed to be mined up at like 2042 or something. Okay. And if it keeps getting cut in half, well, is it ever really mined up? Because it's fractional by like 100 million or something. So, but at the same time, once the mining is the minting of new blocks. But by the time that the mining hash rate, everything has gone so exponentially high that minting new blocks isn't necessarily a thing, because in 2040, there aren't that many blocks. It's all going to be about getting those fractions of transaction fees and things, right? So it's going to be a little bit different. But we're still in its infancy. Even though we're now heading into, 4 halvings, it's still very much in its infancy. And the next Bitcoin halving isn't going to be until 2024. So we still have like a good year and a half until the next halving. Well, what happens at the halving is, price changes quite a bit. And I'm going to show you ultimately what I see is going to happen. So we're going to open this up here. And I'm going to show you my chart. All right, so this is my Bitcoin weekly chart right now. And you can see how, we had the one peak and then the second peak, and then we continued working our way down. And here we are right here. Now, you're going to see, what I called the second peak. A lot of people are like, how did you know that? How could you possibly have known that? Well, I do a lot of experimenting, and I like to do a lot of different things. So I was actually comparing the NASDAQ 2003 on, and I took the peak of the NASDAQ and I did a bars pattern, and I threw it over my chart in Bitcoin on a weekly candle. And lo and behold, it lined up pretty accurately all the way back here. And so I saw a 2-peak cycle in the NASDAQ, and I'm like, and everything else lined up. So then I just went ahead and did a bars pattern from the peak at the end. And then I'm like, okay, how is the bear market going to go? And so far it's been pretty accurate there too. And there's a whole theory that I have on that, but that's another video or YouTube video. But anyway, here we are right now in this weekly candle. We've been dropping down to new lows. I have explained that I could see us wicking down to $10,690 at the bottom, and at which point we will have dropped 85% in Bitcoin's value from the second peak of the market. Technically, I think we could actually hit 9,600. Okay. at which point we'll probably climb back up. Now, if you're looking at this blue line right here, this is the proposed halving date in April of 2024. So what generally happens is I expect us to see potentially not new highs, but we will have climbed back a decent amount towards the previous high somewhere within this channel. And then we'll cross into the halving. We're likely to get a little bit of a dip post halving, which is pretty common. And then we start heading off into our next bull market. Okay. And we have seen this time and time and time again. This is what happened at the last halving. So if you look all the way back here, this is where I was planning my convention when Bitcoin was at $4,000, trying to tell everybody the same thing I'm telling them now. Listen, we've got another opportunity from the 2017 market where Bitcoin topped out at around 20,000. It came all the way down to 4. And the sentiment was Bitcoin will never see 8,000 again, right? And because people read these headlines and they think that's the case, they don't look at the overall, like what's happening. Why is this happening? At the time, JP Morgan, all these major institutions, these banking institutions, funds, all these people were basically building their vehicles for, investing into crypto, establishing their own order desks and all sorts of things. And they were flooding the market, trying to keep the price down. And a lot of people that were coming from traditional markets believed it. And so the sentiment was, oh, Bitcoin's never going to see 8,000 again. And then suddenly, when JP Morgan and Diamond and all these guys, Goldman Sachs, all these groups, they got all their vehicles in place, their order desks, everything, all of a sudden, Bitcoin to new highs. The whole sentiment in the press changed. And then we saw the price start to rise, right? Because people are starting to come around. And then we went sideways for quite a while until the halving. And this is the same thing that happened in the previous halving cycles, but I have to zoom in, but it's all very, very similar. Okay. So that is what a halving cycle is. That is what these market cycles are all about. And the thing of it is, these cycles genuinely, it dictates everything going on in the crypto space. Okay. And at some point, some of these things actually play a role in the traditional financial markets as well. You can see confluence in what's happening in the Bitcoin price and then traditional stocks. Now, this is the Bitcoin difficulty chart. And, everybody talks about the having this, having that. And what nobody ever really mentions is that it goes beyond just the every 4-year mining yields cut in half. It goes beyond that because the difficulty in Bitcoin consistently rises every month. This is 2016 all the way back here. And you can see the difficulty in mining Bitcoin has continued to climb. We had some substantial dips. This was August of 2021. Okay. So May, this was around the peak when everything crashes. You had miners selling up. They were using old mining equipment. A lot of big mining farms were liquidating their old mining equipment. Hash rates dropped. But as the number of miners throughout the world running these nodes and so forth continue to grow, difficulty goes up because the algorithm is structured that way. So the more people there are trying to get a piece of the Bitcoin pie, the more difficult it is to get that piece. Okay, so it's brilliant, really. It's absolutely brilliant. But ultimately, this plays a significant role in the price action as well. So that's ultimately it in a nutshell. I mean, the mining are the halving system, the market cycles. This has been an every 4-year occurrence. Me calling the peak and calling the bottom before that's not because I'm psychic or I'm some wizard trader. It's just understanding what's happening. Now, as we move forward, and I'm going to leave you with this, as traditional markets continue to what I believe regulation is going to continue, flowing into the crypto space. And I ultimately think that Traditional stocks are going to be tokenized. We're going to see them either in the form of NFTs, security tokens, traded on US regulated exchanges, probably something like Coinbase. Now, when this stuff comes to fruition, maybe I'll be a prophet at that point. But that's where I think we're going. Not only that, but I believe that regulations are probably going to push out a lot of the stable tokens in the market, like USD Tether and some of these others, in favor of like the CBDC tokens, which I'll get into in another lecture later. There are a lot of changes happening, and ultimately I see a merger of the crypto market and the traditional stock markets, and they all become one thing. And I believe that a lot of that is going to happen and stem from the crypto regulation that's going to be happening. We already have some commodity securities, what's what. Nobody really knows 100%. It's always kind of in question. But once that gets boiled down and we figure that out, well, then I think the paradigm is going to change in crypto quite a bit. And I think that when that happens, the Bitcoin halving cycle may very well not play as significant a role in what happens in the crypto markets, because there are so many other variables to things at that point, when it's going to be more based on macroeconomic, global economic systems and situations, instead of just, here's a mining algorithm that happens every 4 years, everything gets cut, the supply gets cut in half while demand goes higher. So hopefully that makes sense to you, and that should hopefully put things into a little bit of perspective as we continue to move forward throughout this course. I'll see you soon.